Good morning, everybody. It's March 31st, last day of the quarter, and welcome to And with that rockin' tune, straight out of Canada, it is time for Option Pits. Welcome, everybody. I'm Andrew Giovinazzi, Chief Operating Officer, OptionPit.com, your home for options, education, and volatility. Well, what do we got? Yes, that tune came straight out of Canada, right? It did. Mark noting in the blog, EVZ volatility for the euro still pretty high. We have some in our strategy letter reflecting that. Working out okay. Next stop. Okay. VIX 15. What I euphemistically phrase as zone 2, kind of a medium moving market. Okay. Basically, everything we're just trading. We go up, we go down, there's no trend, there's not a whole lot of anything. Okay. 20-day vol in the SPY is 14.29. That's pretty volatile, actually, for the SPY, relative. For a 20-day number. Okay. If you look at it, if you look at the last 6 months, definitely trading. I'm not going to say the highest the 20-day vol has been, but considering we have this October number, we're way up here at 18. You know, we're sitting at the top end of the range and kind of climbing. So the reality is, I'm going to say VIX as priced is fair. At the money volatility, fair. Are we a 16, 17 market? Nah, not really. 15 feels kind of fairish. Okay, so we do have some premium in the May futures. Not so much anymore. Right? You know, you've got almost $3 solid, although that came in a lot on the rally in VIX cash yesterday. That was a little over $3. Now it's dropped a bit. So the futures are kind of sitting up here in this higher level, right? 17, 18s, all this, and not really going away. Okay? Basically because, and this is a theory the Fed, yep, Hans is saying they're looking to the summer Greece and Fed. There is not the veneer of the Fed intervening like there was before. The language has changed enough, right? I guess it's imperceptible changes, or however their glacial changes in language are. But reality is we got that kind of run to all-time highs. Since then, the Fed has changed the language, and we have not gotten back to that level since. Okay? Had some rallies, little euphoria, and then the reality is that interest rates, if you're going to invest in the U.S., you can't lean on those. So by consequence, we have a market that's a little more volatile, a little bit more of a trader's market, I think. The vol products are going to be a little tougher to trade. I think more we are looking for contango plays and things like that. You know, you might see a bid, but every time, VIX, if it gets down to the 13 handle or something like that, it's probably due for a little pop-up, right? Because we don't have that clear stability to let realized vol drop a lot, right? Things might get a little slow. We have this Iran deal with oil. Who knows how that's all going to affect. But the reality is realized vol is not going down. It has gone up. Okay, So you keep that in mind. We could get brushbacks, sell-offs, what have you, which might set up nice opportunities, but it doesn't look awful, right? Because the rates are still low, and it looks like the economic news driven by some monetary stimulus is getting okay, which keeps us from basically crashing, right? We need something awful for a crash. We just really haven't had that since October. All righty? So with that all being said, I am looking for trades that have some type of gamma in them, some type. And that's what we'll look at for today in our chat room. Possibly some plays on that, what I would call that more expensive May future in VIX. Other than that, that is our morning volatility report. And I'll see many of you in the option pit chat room later today. Bye-bye.